Jamie Dimon's not been having a good week or two, and for good reason, given the $2 billion trading blunder. David Reilly of Heard on the Street argues that investors are actually well ahead of the curve of even Jamie Dimon.
Jamie Dimon and the politicians in Washington.
And the politicians. I mean, I'm going to put your argument in a nutshell. Too big to fail. Investors are scared about that. They think the regulators are going to put the kibosh on these big banks, and that because of that, investors are flocking away or fleeing the big banks and going to the regional and to the smaller banks.
Right.
Did I get that right?
Yeah, and basically what investors are saying is, we don't think this business model works anymore. So we're going to penalize
There's
them.
a cap on deposits right now, correct? What is it, like 20%? You can't have any big bank can't be...
No, the cap on deposits is once you get to 10% of total deposits, you can't acquire more than that.
Okay. Is that how should we be thinking of too big to fail? Should we be thinking about deposits, or should we be thinking really along the lines that Goldman Sachs is too big to fail? That anybody who's interweaving...
It's a combination of things. I think you have one is just sheer size. So you're looking, if you have above $500 billion in assets, as Goldman, Morgan, J.P. Morgan, Citigroup, Bank of America, and Wells all do, that's one thing. Another thing would be just deposits, how big a threat you are there. I think a key thing is the interconnections. And one way to look at that is, what's the size of your derivatives book? And that's where it becomes interesting that Wells actually doesn't look as too big to fail on that score. It has a very small derivatives book.
How's Wells trade versus J.P. Morgan? Trades above book?
Wells trades above book, and Wells trades more like the regional banks in
like
terms
US
of valuation.
Bancorp, for example.
Yeah, although U.S. Bancorp is well above everyone. I mean, that's
right. It's an outlier.
It's an outlier, but that also goes that they're a really conservative bank. They've stuck to their knitting. Investors feel like they can understand them and see growth.
But let me propose.
And they're rewarding that.
I'm asking the question: isn't it possible that the investors are getting it wrong? Isn't it possible that investors are just overreacting to J.P. Morgan, and they're in fact overpaying for the regional the banks, and they're undervaluing the big banks? It seems a little odd that these banks are still trading at 60% or 70% of book value. It just seems wrong.
Well, the question is, how much do you want to place, though, in terms of valuation on the trading business? I mean, would you pay more than tangible book for a trading business?
Probably not.
Okay, so there you go. Now, so then you take and you still have, say, with Bank of America, what's those mortgage liabilities like? You got some questions there still, so that's going to take you down a bit below book. I mean, there's lots of different things that are weighing on
And
that.
so investors like to understand what they're buying, and if you buy a small bank...
imagine that. People want to know what it is they're buying.
And there we go. You got a nice little chart here that they're obviously less complex. They're focused on the U.S.,
Right.
Just because some people go on strike in Athens doesn't mean that the value of your bank's going to go down.
Those two things are interlinked, though, because it's not just that the bigger banks are really exposed to the rest of the world. It's also, though, that you're not clear how those exposures are going to work. Because you're looking and you're saying, okay, well, what's the exposure? How are they hedged to Europe? But how are they exposed to maybe the other European banks? And also, how are they exposed to each other? So you have to be thinking through a lot of things there. Whereas with the regional banks, there's still risk, but it's more focused.
Okay, I got to run. Final question, yes or no? Are investors overly scared by the big banks now? Yes or no?
Oh, I think they're definitely overly scared. It's just a question, maybe they should be.
That wasn't the answer I was looking for.